You're watching us here on Chartbusters on CNBC-TV18. For the frontline indices, we've seen a bit of a decline from the highs, still holding on, with 24,400 on the Nifty, 80,800 on the Sensex as well. So it's consolidation from yesterday's high. We've seen a cut of almost 150 odd points, but it is this range-bound consolidation which continues in the market ahead of the RBI policy outcome tomorrow. Importantly, a bunch of these broader market stocks are doing extremely well, and most notably among them are the ones which entered the FNO in very recent series itself. So we have something like a Zomato, which is up around 3.5 odd percent. Angel One itself has moved to the high point of trade, giving it company on the way up is something like a CAMS, which has done well. And then you have BSE. BSE also has been the latest entrant to the NSE derivatives list starting December series itself. And that stock continues to surge, has doubled in this year itself, up around 7.5% as we speak. Good time to get in Sachidanand Undertaker for a quick technical check on the market. Sachi, do you think this is, what is likely to continue with consolidation on the frontline indices and a lot of individual stocks making their own moves?
Good morning, Mangalam. Absolutely true. In fact, if you look at today's movement itself, Nifty did make an attempt towards 24,500. But the way it has been slipping lower, I think we may see it revisiting the support of its 5-day exponential moving average, which is placed somewhere close to around 24,340. Now, for the last 4 trading sessions, it has maintained its tail above the same. So even today, we are expecting that 24,380, 340 would be an ideal zone wherein some long positions can be committed. But on the higher side, we don't see it breaking above that 24,500 cluster, at least in today's session. So probably we may see this range-bound consolidation when it comes to indices. But if you see some of the stocks, especially from the Nifty IT space, they have been doing really well. The mid-cap stocks are trending higher, and we may see some good opportunities coming on the long side from this particular pocket itself.
Okay, all right. Hi, Sachi. Good morning and good to see you in. Nigel on this side. What about the individual stocks? You want to give us some ideas?
Good morning, Nigel. Nigel, as I said, Nifty IT has been consistently performing, and we are seeing a lot of good, mid-cap stocks which have showed a good amount of strength in the last 5 trading sessions. The one stock which we have recommended to our clients is Tata Elxsi. Now, if you look at the overall structure, the stock was trending lower. We have already seen a change in trend in this particular stock in the last 2 trading sessions. If you look at the overall development, it has started trending confidently above its 200-day exponential moving average after almost 2 months. There's a positive crossover on its 5 and 20 exponential moving averages, which is a good sign of continued directional momentum. And plus, its ADX on the daily scale has broken out above that 25 level. So I think it's a healthy trend which has been evolving. We expect this particular move to extend towards 75.20 and eventually towards 78.50. And that's why we are recommending building fresh long positions in Tata Elxsi futures, keeping a stop loss at 70.10. The other pocket of strength has been from the banking side, and the recovery in SBI has been phenomenal. We have already seen a V-shaped recovery here. The immediate hurdle at around 850 has been, breached confidently, and it has been holding itself above that 860 mark well. So keeping a stop loss at around 852, one can, deploy fresh long positions in SBI for a positional target of 900.
All right, Sachi, thanks a lot for joining in. And as you were speaking about stocks, the stock that really caught everyone's attention was Swiggy, continuously up, moving higher. This morning, in fact, it was an underperformer when it came to Zomato and Swiggy. Zomato was up around 4%, but now it seems like, that valuation gap once again catching up. So Swiggy is swiftly caught up. Zomato saw a big up move and now sitting with a gain of almost 4%. Pull up the intraday chart of Swiggy, you would see it open slightly flattish. For a large part of the morning so far was flat. Once it saw Zomato move higher, Swiggy itself moved higher and moved a step further, up around 6.5% for Swiggy as compared to Zomato. So the case for this valuation gap narrowing is something that the street is playing for between these two. It will be very interesting to see where this goes, because Zomato being in the FNO right now has, the ability of a lot more liquidity and a lot more trades happening out there in terms of the FNO space itself. But Swiggy, due to paucity of volumes in the
Yes.
cash market as well, is continuously moving higher. Over the next few days, we'll probably get some, more lock-ins coming out on Swiggy. We'll keep an eye out on that one. But for now, it seems like, Mary had a little lamb. Wherever Mary went, the lamb went too.
Well, that's why the liquidity factor at play, Mangalam. So, the next few days, as you said, a better price discovery, I think, is something that we could work with. Another stock that we're looking at is Infra. Just pull up the chart out there. We are at CNBC-TV18 have been telling you for the entire of 2024 that chrome ore is in shortage. And if chrome ore is in shortage, then you'll have ferrochrome prices that will get a bit of a, tailwind. And on this show itself, we have interviewed the management numerous times who have been indicating that, yes, there is a shortage on ferrochrome and they are backward integrated. So they have it captively. If you pull up a year-to-date chart as well, you'll see that the stock has done well. And the last 1 month or so, the stock has really surged up. It saw a bit of a time-wise correction between July to around November. And from, off late, we've seen a big jump up on that one.
All right, we'll keep an eye out on that, and at the bottom of your screen as well, the city gas company is in focus, where the government says they do not see a rollback of APM gas sourcing for their requirements. City gas companies should do intelligent sourcing for their requirements. So this means there's a bit of a negative coming in for city gas as well. Those who are hoping for some sort of reprieve coming in from the earlier APM gas allocation cuts for city gas companies, hoping for a bit of a rollback. That doesn't happen. That is, the word coming in from sources. What we'll do is take a short break, come back, get Sapna to talk a little more about that. But, from prima facie, this looks like it is negative news that continues for all the city gas distribution companies.
Welcome back. Well, we have the hotel stocks that are in focus. Multiple brokerage reports since morning. Mangalam, tell us, a few of them are buzzing. Juniper is one of them.
Juniper is one of them. Then you have Park Hotels as well, both of them in focus. Juniper, let's start with that. More than anything else, more than just the reports, etc., it is December. Typically, hotels do extremely well in December. We have 48 lakh weddings in 34 days itself. So CLSA says that, this is a place to be. Not the hotel, but the sector itself. They've initiated by a target of 430 odd rupees. They say that Juniper has the largest, keys of Hyatt hotels in India itself, and they've got a strong track record of building assets with high entry barriers as well. And why is this space to be? Because one hotel, over the next 5 years, demand is expected to compound at around 10.5%. Supply grows at just about 9%. So keeping the demand-supply metrics in favor for the industry itself, and in that, these companies will benefit from the current upcycle itself. CLSA expects 16% EBITDA CAGR for this company over the next couple of years. They will benefit from increased average room rates and occupancy at the Grand Hyatt Mumbai post the renovation that has happened. And in Delhi as well, the Andaz Hotel will keep its ARR high itself. Speaking about Park Hotels, Anand Rathi has said that, they have a buy rating. They've trimmed their target price, but the target price trimming is due to the first half, which was weak. In the second half itself, there is strength because, there is robust festival demand, there is more wedding dates. And for them, two things are working. At the higher end, they've opened a couple of palaces, one in Chettinad and the other in Patiala. Both of them very expensive. Over 30 to 80,000 rupees per night is the room rate, management had told us. And Flurys, which is the lower end, which is the cafe, etc., likely to show 40% growth over, FY25 over FY24 with 18% margins. In fact, the management is committed to double-digit growth in the upcoming quarters. They had said to us post their second quarter earnings itself, with these palace hotels, the ARRs will improve, and Flurys, which is the cafe, will have 120 outlets by the end of this year. And every year thereafter, they will open 40 to 50 outlets with 300 to 350 outlets from Flurys targeted over the next few years itself. With all of these things, the question is what happens to the valuations and what are the next triggers that you're looking at? I'm looking at ITC. Why? Because over the next few days, we'll probably get the record date come in for the hotel business demerger of ITC. So that's something we'll most definitely keep an eye out on. And valuations, of course, there is the Taj and there's the rest of them as well. So you have Indian Hotels, which is close to around 37 times, Chalet Hotels around 25 times. Then you have majority of them trading anywhere between 14 to 18 times EV to EBITDA. And you have some like Park Hotels as well as Sami at the lower end of the spectrum trading at around 13 to 14 times. So important space to keep an eye out on from a seasonal perspective, structural perspective, and perhaps, the weekend perspective as well.
All right. Well, we'll slip into that short break. Come back. We'll continue to focus on news updates and a lot of stocks that are moving around. Welcome back. We'll keep an eye out on a few stocks. Granules India, a couple of sessions ago, there was this negative news that came in there. And then the stock went into the F&O ban. And those are this big surge in terms of short positions. Just take a look at the stock. From the lows that it made a couple of sessions ago, that was 525 odd. Now it's at around 560. So the news did play out, and it appears now the shorts are stuck in the system. That's why that stock is seeing that surge up. So just keep an eye out on that one. The other one we're looking at is the graphite electrode companies. We had told you earlier today that that export ban that's been put on some of the Chinese items, that's on graphite, not on graphite electrodes. So for the time being, Graphite India is reacting to that. It's down close to around 6%. HEG, there was a large trade that took place at around 600 rupees also. We're waiting to see who were the parties on that. But the stocks have come off. Even HEG has come off the high point of the day. So let's see how that goes. But for the time being, it seems the stocks had run ahead of itself. Well, on that note, we'll wrap up on this edition of Chartbusters. Stay with us. Trading Hour comes up next.